In the final hours of December 25, 2025, as economic analysts across Beijing, Moscow, and Johannesburg reviewed the year's closing data from the People's Bank of China and the BRICS New Development Bank, a transformative trend came into sharp focus. Trade settlements among the BRICS nations, now expanded to include Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, had seen the Chinese yuan's share surge to nearly 50% of intragroup transactions, according to aggregated reports from member central banks. This marked a dramatic escalation from just 20% 3 years prior, while the US dollar's portion plummeted to below 30%, its lowest level in recorded history for this bloc. What had started as isolated bilateral experiments amid geopolitical tensions had coalesced into a systemic shift, challenging the dollar's long-held supremacy in emerging market trade. In the quiet offices of the New Development Bank in Shanghai, officials toasted not just the figures but the quiet revolution they represented, a world where the yuan, backed by China's vast economy, was no longer a peripheral player but a central force in reshaping global finance. To grasp the significance of this development, we must begin with the fundamentals of international currency usage and the role of the BRICS alliance in the global economy. International trade involves the exchange of goods and services between countries, but behind every transaction lies the question of payment. What currency will be used to settle the bill? For decades, the US dollar has dominated this process, serving as the world's reserve currency. This means that even when two non-American countries trade, say Brazil exporting soybeans to China, the invoice is often denominated in dollars and payment flows through US-linked banks. The dollar's status stems from the Bretton Woods system established in 1944, where post-World War II nations agreed to peg their currencies to the dollar, which was convertible to gold. When President Richard Nixon ended gold convertibility in 1971, the dollar retained its primacy through U.S. economic might, deep financial markets, and the petrodollar system, where oil is priced in dollars. This gives the United States immense influence. It can print money to fund deficits, and sanctions can weaponize the dollar by freezing assets or blocking access to global payment networks like SWIFT. De-dollarization is the counter-movement, the deliberate reduction of dollar reliance in trade, reserves, and investments. It involves shifting to local currencies, like the yuan or ruble, or alternatives such as the euro or gold. This isn't about abandoning the dollar overnight, but gradually building parallel systems to insulate economies from U.S. policy swings or sanctions. The BRICS group, formed in 2009 as BRIC, adding South Africa in 2010, emerged as a platform for this. Initially an acronym coined by economist Jim O'Neill, it evolved into a forum for emerging powers to coordinate on development, trade, and finance. By 2024, expansion to include Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE swelled its population to over 45% of the world's total, and its GDP to nearly 30%, surpassing the G7 in purchasing power parity terms. BRICS isn't a formal alliance like NATO, but a loose coalition with institutions like the New Development Bank, founded in 2015 to fund infrastructure without Western strings. China's yuan, or renminbi, has been the linchpin of de-dollarization within BRICS. Officially internationalized in 2016 when the IMF added it to its special drawing rights basket, the yuan benefits from China's status as the world's largest trader, exporting over $3 trillion annually. Yet globally, it accounts for just 4% of payments per SWIFT data due to capital controls and limited convertibility. Within BRICS, however, the yuan's role has grown exponentially, driven by China's trade surpluses and lending. For instance, the Cross-Border Interbank Payment System, or CIPS, launched in 2015, processes yuan transactions independently of SWIFT, handling over $12 trillion equivalent by 2025. The surge in yuan trade within BRICS unfolded step by step, accelerated by external shocks. It began in earnest with Russia's 2022 invasion of Ukraine, which prompted Western sanctions freezing $300 billion of Russian reserves and excluding banks from SWIFT. Russia, facing isolation, pivoted to BRICS partners. In March 2022, Russia and China agreed to settle 95% of their trade in yuan and rubles, bypassing the dollar. By year's end, bilateral trade hit $240 billion, with yuan dominating. India followed in July 2022, establishing rupee-ruble accounts for oil purchases, but yuan soon entered as a bridge currency for imbalances. By 2023, BRICS summits emphasized de-dollarization. In Johannesburg, leaders discussed a common payment system, though no new currency emerged. Yuan usage rose to 25% of intra-BRICS trade, per New Development Bank estimates, as China extended yuan loans via the Belt and Road Initiative. Brazil and China signed a yuan settlement deal in March 2023, settling $20 billion in trade that year. South Africa, hosting the summit, piloted yuan for gold trades. Expansion in 2024 supercharged the trend. New members like Saudi Arabia and Iran, oil exporters, integrated yuan for energy deals. At the Kazan summit in October 2024, BRICS Plus committed to 50% local currency settlements by 2025. Yuan surged to 40% of trade, with dollar share falling to 45%. China settled $600 billion with BRICS in yuan, up 30%. 2025 saw the pinnacle. First half data showed China settling $855 billion with BRICS in yuan, per People's Bank reports. By July, intra-BRICS yuan share hit 50% at the Rio summit, with dollar at 30%. Russia-China trade was 98% non-dollar, India-China 40% yuan. New members accelerated. UAE settled 60% of China trade in yuan, Iran 80%. By December, full-year figures confirmed yuan at 50%, dollar below 30%. Hidden factors include trade imbalances. China's surpluses make yuan attractive for exporters like Russia, but importers like India accumulate yuan, investing in Chinese bonds. Gold buying by BRICS, 50% of global purchases in 2025, backs de-dollarization with $2.1 billion in reserves. Political motivations, sanctions on Russia, U.S. tariffs on China drive the shift. Challenges: yuan's limited convertibility, capital controls limit full adoption. Global implications: erodes dollar hegemony, raising U.S. borrowing costs. Commodities priced in yuan could stabilize prices for BRICS but fragment markets. Emerging economies may follow, accelerating de-dollarization. Geopolitically, strengthens BRICS as counterweight to G7. In conclusion, this surge reflects a new era of financial multipolarity, urging caution in its implications for stability. The year to close, the trajectory of yuan-denominated trade within the expanded BRICS alliance has solidified into a pattern of steady advancement rather than dramatic breakthrough, with the Chinese currency accounting for approximately 30 to 40% of intragroup settlements in many bilateral corridors, while the US dollar retains a substantial presence in others, estimated at 40 to 60% overall depending on the pair. Year-end assessments from central banks and the New Development Bank indicate that local currency usage, including the yuan, has risen to around 65 to 70% across BRICS trade flows, reflecting incremental progress driven by bilateral agreements and payment infrastructure refinements. The Rio de Janeiro summit in July, under Brazil's presidency, prioritized practical mechanisms for local currency facilitation over ambitious unified alternatives, yielding commitments to enhance cross-border systems and report on progress in 2026. This measured approach underscores a pragmatic consolidation of gains amid internal divergences and external pressures, positioning the yuan as a prominent but not dominant vehicle in the bloc's evolving financial landscape. The year's concluding developments emphasized continuity and institutional deepening. Full-year trade among BRICS members exceeded previous records, bolstered by energy and commodity exchanges, with yuan settlements prominent in China-centric corridors. Russia reported near-complete non-dollar trade with China, while Brazil and South Africa advanced yuan real and yuan rand pilots. India's engagements maintained a mix, favoring rupee where possible but incorporating yuan as a bridge in multilateral contexts. The New Development Bank's lending in local currencies approached 25% of its portfolio, supporting infrastructure without dollar intermediation. December brought no major summits but saw technical working groups advance interoperability protocols and blockchain pilots for settlement efficiency. Central bank statements reaffirmed targets for expanded local currency usage, with yuan liquidity pools growing through swap lines. Gold purchases by members continued as a diversification hedge, complementing currency shifts without displacing established reserves. This tempered momentum reflects balanced realities. Yuan adoption thrives in trade surpluses favoring China, but encounters caution elsewhere due to convertibility constraints and preferences for bilateral symmetry. Dollar persistence stems from liquidity depth and invoicing habits, particularly in commodity contracts outside direct China links. Less examined aspects sustain the progression. Bilateral swap networks provide yuan access without full market exposure. Heil CIPS expansion to additional participants enhances processing independence. Political consensus prioritizes incremental autonomy over confrontation, navigating tariff threats and regulatory variances. Geopolitically, the framework supports resilient South-South cooperation, informing broader initiatives like SCO integrations. commodity pricing remains predominantly dollar-based, limiting immediate disruptions but fostering gradual alternatives. In this contemplative end to 2025, the yuan's expanded role in BRICS trade, prominent in key corridors yet part of a diversified local currency mosaic, illustrates a deliberate, phased evolution toward reduced external dependencies. The Rio outcomes, focusing on facilitation and reporting mechanisms, a firm commitment to practical sovereignty without overreach. Endurance depends on harmonizing interests, broadening yuan acceptance through transparency enhancements, while respecting preferences for other nationals like the rupee or real. The collective rise in local settlements validates infrastructural investments, shielding flows from unilateral volatilities and exemplifying collaborative pathways in plural finance. As the year closes this December 25, with transactions increasingly rooted through domestic currencies, the BRICS dynamic transcends percentages. It embodies strategic calibration, merging economic pragmatism with shared aspirations. The yuan surge, substantial yet contextualized, contributes to a maturing multipolar order where alternatives enhance choice rather than supplant incumbents. In pursuing balanced advancement, the alliance navigates complexities, enriching global resilience through diversified conduits that reflect collective strengths and mutual respect. Another year of incremental yet deliberate evolution in global financial practices. The role of the Chinese yuan within BRICS trade settlements has continued to expand in a measured and pragmatic manner, reaching an estimated 35 to 45% share in many key bilateral corridors, while contributing to an overall local currency usage rate of approximately 70% across the expanded alliance. Year-end reviews from member central banks and the new development bank highlight sustained progress in payment infrastructure and bilateral swap arrangements, with the yuan serving as a prominent bridge currency alongside others such as the ruble, rupee, and real. The absence of a major summit in the final quarter allowed technical working groups to focus on implementation, refining cross-border clearing mechanisms and reporting frameworks established at the July Rio de Janeiro gathering under Brazil's presidency. This consolidation phase reflects a strategic emphasis on functionality and interoperability over symbolic breakthroughs, ensuring that de-dollarization advances steadily without overextending institutional capacities or provoking unnecessary external frictions. The closing months of 2025 emphasized practical refinement rather than headline announcements. Central bank data releases in November and December confirmed that yuan-denominated settlements in China-centric trade flows maintained strong momentum, particularly with Russia, Iran, and the United Arab Emirates, where proportions approached or exceeded 80% in certain categories. Brazil's trade with China saw yuan usage rise to around 40%, supported by expanded swap lines renewed in October. South Africa's engagements incorporated yuan for a growing portion of commodity transactions, while India's multilateral trade within the bloc increasingly utilized yuan as a neutral vehicle for imbalance adjustments, complementing direct rupee mechanisms. The new development bank's annual report, published mid-December, noted that nearly 30% of its new approvals were denominated in member currencies, primarily yuan, funding sustainable infrastructure without dollar conversion. Technical advancements provided the quiet backbone. Working groups progressed on harmonizing reporting standards for local currency transactions, enabling more accurate aggregate tracking in 2026. Pilot programs testing blockchain-distributed ledger applications for select commodity settlements demonstrated reduced processing times and enhanced transparency, with results shared internally ahead of wider rollout. Bilateral currency swap facilities, totaling over $300 billion equivalent across the alliance, ensured sufficient liquidity for importers facing temporary deficits, mitigating conversion pressures. This steady trajectory mirrors balanced underlying dynamics. The yuan's prominence stems from China's central trade position and surplus generation, making it a natural settlement choice for exporters, yet members prioritize bilateral symmetry where feasible, preserving national currencies in direct exchanges. Dollar retention persists in contracts requiring global benchmarking or third-party arbitration, reflecting entrenched invoicing ions rather than ideological resistance. Subtler elements sustain the momentum. Enhanced CIPS connectivity for non-Chinese institutions lowers barriers to yuan usage, while gold accumulation by several members serves as a complementary hedge, diversifying reserves without direct currency confrontation. Political cohesion emphasizes gradual autonomy, navigating trade disputes and regulatory differences through dialogue rather than haste. Geopolitically, the framework bolsters resilient cooperation among developing economies, informing parallel initiatives in broader forums. Commodity markets experience limited immediate disruption, with pricing conventions evolving slowly alongside settlement shifts. In this serene terminus to 2025, the yuan's deepened integration into BRICS trade, substantial in scale yet embedded within a broader local currency ecosystem, exemplifies disciplined, collective adaptation to contemporary financial realities. The year's focus on implementation and refinement affirms a mature approach, prioritizing operational reliability and mutual benefit over accelerated transformation. Long-term coherence requires ongoing calibration, expanding yuan accessibility through progressive liberalization, while honoring preferences for diverse nationals and maintaining transparent governance. The aggregate rise in local settlements validates sustained infrastructural commitment, safeguarding flows from unilateral externalities and illustrating collaborative alternatives in an increasingly plural landscape. As communities reflect this December 25 amid transactions rooted through varied domestic currencies, the BRICS experience surpasses quantitative milestones. It embodies strategic foresight, harmonizing economic imperatives with shared developmental goals. The yuan's advancing yet contextualized role contributes to a maturing multipolar framework where options enhance agency rather than impose uniformity. Through patient cultivation of interoperability and trust, the alliance navigates intricacies, enriching global stability via diversified pathways that honor sovereign capabilities and collective vision alike. A year of deliberate and incremental progress in the financial architecture of the expanded BRICS alliance, the Chinese yuan's integration into intragroup trade settlements has advanced steadily, achieving an estimated share of 35 to 45% in major bilateral flows, while supporting an overall local currency usage rate approaching 70% across the bloc. Comprehensive year-end compilations from member central banks and the new development bank affirm this consolidation, highlighting refined payment infrastructures, expanded swap facilities, and targeted bilateral protocols as the primary drivers. The July Rio de Janeiro summit under Brazil's presidency established a practical agenda focused on interoperability and transparent reporting, with subsequent months dedicated to execution rather than new declarations. This phase of methodical implementation reflects a mature recognition that sustainable de-dollarization demands operational reliability and mutual accommodation over rapid, uniform transformation. The year's final quarter prioritized execution and evaluation. November and December saw routine updates from financial authorities confirming sustained momentum in yuan-denominated transactions, particularly in corridors involving China as the primary trading partner. Russia maintained near-total non-dollar settlements with China. Iran reported high yuan proportions in energy-related exchanges, and the United Arab Emirates advanced yuan usage in select commodity categories. Brazil's central bank noted a gradual increase to approximately 45% yuan in its China trade, facilitated by renewed swap agreements. South Africa's engagements incorporated yuan for an expanding segment of imports, while India's approach blended rupee prioritization with yuan as a facilitating medium in multilateral imbalances. The new development bank's December disbursements included a notable portion in member currencies, underscoring institutional commitment to alternatives. Technical working groups provided the substantive progress. Efforts centered on standardizing data protocols for local currency transaction monitoring, enabling precise benchmarking for the 2026 review cycle. Pilot initiatives exploring distributed ledger technologies for settlement verification yielded encouraging efficiency metrics, shared among participants to inform scaled applications. Currency swap networks exceeding $300 billion in aggregate capacity ensured adequate liquidity buffers, preventing frictional disruptions during seasonal demand fluctuations. This controlled advancement aligns with equilibrated underlying forces. The yuan's salience derives from China's pivotal trade volume and consistent surpluses, rendering it a convenient choice for counterparties, yet the alliance's diversity encourages parallel utilization of other nationals, ruble, rupee, real, rand, preserving symmetry in direct exchanges. Dollar persistence endures in areas requiring broad market depth or standardized global referencing, representing practical inertia rather than reluctance. Understated components fortify the structure. Progressive enhancements to the cross-border interbank payment system accommodate greater participation, lowering entry thresholds for yuan processing. Complementary reserve diversification, including continued gold acquisitions, provides a neutral hedge without direct currency substitution. consensus-driven governance navigates differing regulatory environments and economic priorities through iterative consultation. Geopolitically, the model reinforces cooperative resilience among emerging and developing economies, offering insights applicable to wider regional frameworks. Commodity pricing conventions evolve gradually, minimizing short-term volatility while accommodating emerging alternatives. In this tranquil closure to 2025, the yuan's entrenched yet proportionate role within BRICS trade, significant in scope and embedded in a multifaceted local currency framework, demonstrates a disciplined pursuit of financial autonomy. The year's emphasis on refinement and delivery affirms a sophisticated strategy, advancing interoperability and trust incrementally to ensure enduring functionality. Future coherence hinges on sustained harmonization, broadening yuan accessibility via measured openness, while upholding space for diverse national currencies and rigorous oversight. The collective elevation of local settlements substantiates ongoing investments in infrastructure, insulating exchanges from extraneous influences and exemplifying viable pluralism in international finance. As the calendar turns this December 25, with cross-border payments increasingly channeled through sovereign currencies, the BRICS endeavor extends beyond statistical aggregates. It signifies thoughtful stewardship, aligning pragmatic economics with developmental solidarity. The yuan's measured ascent, contextualized within broader diversification, enriches a maturing multipolar system where alternatives foster resilience rather than rivalry. By cultivating patient integration and reciprocal benefit, the alliance traverses complexities, contributing to a global order distinguished by inclusive pathways and balanced sovereignty. The year to its serene conclusion, the integration of the Chinese yuan into trade settlements across the expanded BRICS alliance has progressed with characteristic deliberation and pragmatism, attaining an estimated share of 35 to 45% in principal bilateral corridors, while underpinning an aggregate local currency usage rate nearing 70% throughout the bloc. Consolidated year-end evaluations from participating central banks and the new development bank underscore this methodical consolidation, attributing advances to refined clearing systems, broadened bilateral swap accords, and focused implementation of the interoperability agenda outlined at the July Rio de Janeiro summit. The final quarter's emphasis on technical execution and performance assessment reflects a sophisticated understanding that enduring financial diversification requires robust operational foundations and inclusive governance rather than accelerated uniformity or declarative milestones. The year's closing period centered on substantive delivery and calibration. Routine disclosures in November and December reaffirmed consistent yuan adoption in trade flows anchored by China, with proportions remaining elevated in partnerships involving Russia, Iran, and the United Arab Emirates. Brazil's monetary authorities reported a stable progression toward 45% yuan settlement in its exchanges with China, sustained by periodic swap renewals. South Africa's incorporation of yuan for commodity-related imports continued apace, while India's multifaceted engagements balanced rupee primacy with yuan facilitation in cases of multilateral asymmetry. The new development bank's end-of-year portfolio review highlighted that approximately 30% of commitments were extended in member currencies, predominantly yuan, supporting developmental projects free of external conversion obligations. Dedicated working groups furnished the essential groundwork. Initiatives focused on harmonizing transaction reporting norms progressed towards standardized metrics, facilitating accurate multilateral benchmarking anticipated for the 2026 cycle. Experimental applications of distributed ledger protocols for targeted settlement verification produced favorable outcomes in efficiency and auditability, circulated among stakeholders to guide prospective expansion. Currency swap arrangements, aggregating substantial capacity, maintained liquidity equilibrium, averting seasonal imbalances. This calibrated momentum corresponds to equilibrated structural elements. The yuan's utility arises from China's commanding trade centrality and recurrent surpluses, positioning it as an efficient settlement medium for counterparties. Yet the alliance's heterogeneity fosters concurrent employment of alternative nationals, ruble, rupee, real, rand, safeguarding reciprocity in pairwise interactions. Dollar continuity prevails in domains necessitating extensive liquidity or standardized global referencing, embodying entrenched conventions rather than opposition. Underappreciated facets reinforce the architecture. Iterative improvements to the cross-border interbank payment system accommodate wider institutional participation, diminishing participation thresholds for yuan handling. Parallel reserve adjustments encompassing ongoing precious metal acquisitions offer impartial diversification without precipitating abrupt currency reallocations. Consensus-oriented coordination accommodates varying supervisory regimes and developmental stages through sustained dialogue. Geopolitically, the paradigm enhances cooperative endurance among emerging economies, yielding transferable insights for adjacent regional configurations. Commodity valuation practices adapt incrementally, constraining near-term turbulence while nurturing emergent options. In this composed finale to 2025, the yuan's established yet proportionate prominence within BRICS trade, meaningful in magnitude and situated amid a diversified local currency constellation, exemplifies a restrained yet resolute quest for financial self-reliance. The year's orientation toward execution and adjustment validates a refined methodology, cultivating interoperability and confidence progressively to guarantee lasting efficacy. Prospective stability rests upon continued alignment, augmenting yuan reach through calibrated openness, while preserving latitude for varied national instruments and stringent stewardship. The communal assent in local settlements corroborates persistent infrastructural dedication, shielding interactions from extraneous perturbations and demonstrating feasible pluralism in transnational finance. As reflection settles this December 25, with payments increasingly directed through sovereign mediums, the BRICS undertaking extends beyond numerical thresholds. It manifests prudent custodianship, reconciling practical economics with communal developmental ethos. The yuan's deliberate advancement, framed within comprehensive diversification, augments a maturing multipolar construct where alternatives cultivate agency rather than antagonism. Via assiduous fostering of integration and reciprocal advantage, the alliance maneuvers intricacies, augmenting worldwide equilibrium through variegated conduits that esteem sovereign proficiencies and joint aspiration equivalently. Ushers in the year's tranquil finale, the Chinese yuan's incorporation into trade settlements throughout the expanded BRICS alliance has advanced with measured consistency and institutional depth, securing an estimated 35 to 45% share in core bilateral channels while bolstering an overall local currency adoption rate approaching 70% across the collective. Year-end syntheses from member monetary authorities and the new development bank corroborate this deliberate maturation, crediting sustained enhancements in clearing protocols, augmented bilateral liquidity arrangements, and diligent pursuit of the facilitation roadmap articulated at the July Rio de Janeiro summit. The concluding quarter's dedication to operational execution and evaluative refinement embodies a refined appreciation that resilient financial pluralism necessitates dependable infrastructural integrity and accommodative coordination rather than precipitous convergence or emblematic proclamations. The year's terminal phase prioritized tangible delivery and fine-tuning. Periodic disclosures during November and December validated enduring yuan utilization in trade streams centered on China, with ratios holding firm in associations with Russia, Iran, and the United Arab Emirates. Brazil's financial overseers documented a maintained trajectory toward 45% yuan settlement in its China-oriented commerce, underpinned by cyclical swap extensions. South Africa's integration of yuan for commodity procurements proceeded steadily, whereas India's comprehensive interactions equilibrated rupee predominance with yuan mediation in instances of multilateral disequilibrium. The new development bank's December portfolio assessment revealed that roughly 30% of obligations were dispersed in constituent currencies, chiefly yuan, advancing developmental endeavors unencumbered by extraneous conversion requisites. Specialized working groups supplied the foundational impetus. Endeavors concentrated on aligning transaction documentation conventions advanced toward unified metrics, paving the way for meticulous multilateral calibration projected for the 2026 appraisal period. Trial deployments of distributed ledger methodologies FO. Our designated settlement authentication generated promising indicators in processing velocity and traceability, disseminated among collaborators to steer prospective amplification. Currency swap configurations, encompassing considerable aggregate scope, preserved liquidity steadiness, forestalling transitory mismatches. This restrained progression resonates with harmonized intrinsic components. The yuan's efficacy emanates from China's commanding commercial centrality and habitual surpluses, establishing it as a proficient settlement conduit for associates, yet the alliance's pluralism promotes simultaneous deployment of supplementary nationals, ruble, rupee, real, rand, upholding equilibrium in dyadic dealings. Dollar sustenance lingers in spheres demanding expansive liquidity or normalized international calibration, manifesting ingrained protocols rather than disinclination. Subtle constituents buttress the edifice. Sequential upgrades to the cross-border interbank payment system facilitate broader institutional engagement, alleviating admittance hurdles for yuan management. Concomitant reserve recalibrations, incorporating persistent precious metal incorporations, furnish neutral diversification absent abrupt monetary reorientations. Accord-based administration reconciles disparate oversight landscapes and growth phases via perpetual consultation. Geopolitically, the construct fortifies collaborative tenacity among developing economies, proffering adaptable precepts for contiguous regional assemblages. Commodity valuation norms transform progressively, curtailing proximate instability while cultivating nascent selections. In this placid denouement to 2025, the yuan's consolidated yet contextualized stature within BRICS trade, substantive in extent and nestled amid a variegated local currency array, manifests a tempered albeit resolute endeavor toward financial independence. The year's devotion to fulfillment and modulation endorses a nuanced tactic, nurturing interoperability and assurance incrementally to secure perpetual viability. Enduring congruence pivots on perpetual synchronization, extending yuan availability via graduated transparency, whilst conserving scope for assorted national instruments and exacting supervision. The communal elevation in local settlements authenticates enduring infrastructural allegiance, insulating engagements from peripheral disturbances and exemplifying practicable pluralism in cross-border finance. As contemplation descends this December 25, with remittances progressively conveyed through indigenous mediums, the BRICS initiative transcends quantitative benchmarks. It incarnates sagacious guardianship, amalgamating utilitarian economics with unified developmental ethos. The yuan's purposeful progression, circumscribed within extensive diversification, enhances a ripening multipolar edifice where alternatives nurture sovereignty rather than contention. Through meticulous stewardship of coalescence and mutual gain, the alliance traverses nuances, augmenting universal poise via manifold avenues that venerate sovereign aptitudes and communal outlook commensurately.